Hello everyone, this is Matthew Frailey with Breakpoint Trades. You know the drill. We've been here since 2003 providing advanced technical analysis, trading systems, etc. to professional institutions and individual traders like yourself. Anyway, let's get started. Since last time I did a YouTube video was on the weekend. And anyway, this is our back-end recorder. It's Wednesday, November 8th. And let's go ahead and get this newsletter started. Hello everyone, this is Matthew Frailey with breakpointtrades.com. This is the Wednesday, November 8th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Same general theme as I always keep. And as far as the market, once again, no major technical changes. My last newsletter on Monday, as you know, the market, again, essentially did nothing, went sideways. And again, no real major changes this week, guys. After last week's big ramp up in the market, the Russell continues to lag. It's down 2.6% for the week, but I am looking for it to form a higher low in this pullback. And of course, the NASDAQ, big cap tech continues to dominate. Microsoft, Meta, etc. You know, breadth has been weak this week. As the market's been primarily led by big cap tech. By the way, Powell speaks tomorrow, and tomorrow morning we have initial jobless claims, a few other news items. All right, let's get started. Item number 2 shows the index sector table, what transpired today and this week so far. Again, you can see today a little bifurcation. S&P slightly up, was down initially. The NASDAQ slightly up. The Russell down 1%, down 2.65% for the week. Again, that's been the weakest index by far this year because it doesn't contain those big cap tech stocks that skew they have such huge weighting percentages on the NASDAQ especially, but also on the S&P. Anyway, major indexes, most of them are up this week except for the Russell. Okay, again, you can see the negative breadth here a bit because out of the 21 market sectors, this week I'd say more are down than are up. Definitely energy took a big hit. And anyway, moving on, US dollar up 0.4% this week, but flat today. Cryptocurrencies continue to move higher, though they're chopping higher. And the big move was over the last couple weeks, as you know. As far as commodities, pretty solid red for the week, especially natural gas down 11.6% for the week. Crude oil down 6.4% for the week. The commodity index, DBC, down 2.84%. And you can see they were all down this week today as well, with crude down 2.64%. The index 1.1%. Copper down 1.1%. Little bit of strength in the ag area, agriculture, corn, wheat. Precious metals, of course, continue to get nailed. Gold down 1%, silver down 0.4%. GDX, the miners, down 3.15%, down 6% for the week. They continue to underperform. As far as bonds and rates, 10-year, 30-year were down today, and they're down for the week. Next. Item number 3 shows the economic news calendar. Like I said, tomorrow, Thursday, we have initial jobless claims, then natural gas inventories. Powell speaks tomorrow. Can't remember the time. It's posted on the trading community. And we still have some stocks that are reporting earnings, though all the big cap tech stocks have already reported. All right, let's jump to the index charts. First chart below, item number 4 is the snapshot of the 5 key major indexes with the Bollinger Bands. Like I said, over a week ago, market was extremely oversold, bearish sentiment out the wazoo. We had some divergences in the McClellan oscillators, etc. We were quite oversold, due for a rally. Indexes were below their lower Bollinger Bands. We had a huge rally last week. Every single day was up 5 days in a row with 4 gaps. And this week the market is continuing to hold up. But it is looking a little tired here in the short term. Would really like to see at least a short-term pullback. And guys, that's how the markets have been. They don't like to let you in. A lot of folks miss this rally and they're trying to get in or they're trying to short it and it's not letting them. But anyway, it is at a spot here where if we're going to get a pullback, this could be the area. Next, chart number 5, here's the daily view of the S&P. Remember we talked about that WXYZ pattern, 5-wave pattern to the downside, and not over the weekend. That produced a nice low. We rallied up. We took out the downtrend line here, this leading diagonal. We're up into this open gap supply zone. We still haven't quite filled the gap, but we're pretty close. Again, the next pullback, I am looking for a higher low. Next, chart number 6, another daily view of the S&P. This is the chart I showed on a weekend, and so far it's been playing out, this scenario in blue. Favored another move up. Now, again, like I said, sometime soon I'm favoring a pullback. One pullback could take it down to the 42.50 area. There's an open gap here. We'll see. And then maybe another rally up. But sometime soon I am looking for some sort of pullback. You can see we have that open gap. We haven't quite filled that. Those are generally a magnet. And there's a downtrend line here to monitor. Next. Chart number 7, here's the KISS trend system for the S&P. This is not the version that is on the STS tables. This is a custom version, which I will be eventually bringing to the website. This went long last week on Tuesday. Great entry there. The previous trade was a whipsaw, which is fine. KISS systems do that. They have, they'll catch big trending moves and I'll get a little whipsaw. Anyway, finally today, a new smart trailing stop. Jumps from 4,100 and basically at the lows all the way up to 42.38. Next, chart number 8, or image number 8. This is a table showing the statistics to that KISS, S&P KISS high performance system versus simple buy and hold. And you can see it's really not even a contest. So since 2003, the average gain on the KISS system, 16.1%. versus only 10.8% on buy and hold. So again, not only do you get higher gains, but the main thing is the drawdown, the lack of drawdown. Look at all these drawdowns. A lot of 1, 2, 5, 4, 1.4, 0% max drawdowns. The max is 5.9. The average, 1.5. If you look at buy and hold, the average is 15% drawdown with a max of 50%. Hard to sit through those, And again, that's just not in 2008, which was the biggest one. 2020, 33% drawdown there. Last year, 28%. What did the KISS system? Only had 5% last year. 2020, while the S&P had 33% drawdown, the KISS only had 1.6%. So pretty cool. Number of trades per year, average about 2.5 to, let's just say, average of 3 trades a year. Again, if you can't find time to make 3 adjustments in your IRA, 401k, you got to re-examine your life. That's not much, guys. I'd rather make 3 to 5 changes a year versus buy and hold where you do nothing and then go through all these drawdowns. Next, image number 9. Here's the 4 time frames we like to follow with the moving average ribbons, the cycles, the DeMark. Again, over a week and a half ago, we had the DeMark 9. We had the support cycle. We had the wide moving average ribbon. Produced a hell of a rally so far. Doji today, getting a little tired here. Short term, we have support of the ATR on all the time frames, as you can see. Okay, we had a little DeMark 13 yesterday, and we haven't really pulled back yet, but it is something to be aware of. Next, chart number 10, here's the half-day chart. Again, shows you the same as that daily chart. Strong rally last week. You can see how wide the moving average ribbon was at the bottom. We took out the downtrend line there. We're into this gap. We haven't quite filled it. Got pretty close. Next, chart number 11. Here's a 60-minute chart. This shows you all those gaps. Again, last week we had 4 gaps. That's pretty insane for the S&P, guys. Anyway, could see a little wedging action here. One way you could look at this, we could have broken the wedge, be back testing it, and this could be an area to pull back unless we just continue to push up. Otherwise, on a nice pullback, a couple of these top gaps could be potential targets. Next. Chart 12, here's that 30-minute chart I've been showing. Remember, I've been showing this little uptrend line, and you can see we're working our way closer to it. Price this week has essentially been going sideways after last week's big rally. Haven't quite caught up to that trend line, but we're getting close. MACD is recycled back to zero. Next. Chart 13, here's a 15-minute chart. Remember this channel I was showing on the weekend? You can see all the gaps. Well, this week's sideways action, we've moved out of the channel, essentially sideways, and I added another channel here to monitor. Breaking this trend line here below 43.70 would likely start that pullback we've been waiting for. Next. Chart 14, here's the other 15-minute chart with the wave count. Again, we're working on this wave 5 essentially. Once this is complete, I'm looking for some sort of decent ABC pullback. Next. Again, guys, it's really been all about big cap tech, like Apple. Apple rallied nicely out of this pattern. And, of course, things like Microsoft here, which is essentially back to its highs. So, again, don't get, 7 to 10 stocks, these big cap stocks, have what has led the market this entire year. Next. Chart 17, here's the NASDAQ. And let me get my little trend line thing out. Thought I had a trend line in here, it disappeared. So anyway, you can see we did break this downtrend line that I had in place. So, that is a positive. We'll see if we continue pushing. Otherwise, this broken trend line is now support on a little pullback. By the way, this rally off that low of 342.35 is the largest rally since that July high. That's a bullish break in symmetry. So again, when you have a bullish break in symmetry, that favors the next pullback forming a higher low. Okay. I've discussed that extensively in educational videos. Next. Chart 18, here's the half-day chart. Shows you the same thing, essentially. The same little channel that we broke through. Next. Chart 19, here's a 60-minute chart. Again, powerful move out of this downtrend channel. Again, so far we've just simply consolidating those big gains. Again, I don't see anything really negative here, guys. We're just up here at some resistance from this mid-October highs. We're either going to pull back here or this consolidate for yet another move higher first. Chart 20, here's the 15-minute chart. Really nothing much here either to say. Next. Chart 21, here's the QQQ KISS trend system. Again, this went long last week. Excellent entry there. No new smart trailing stop yet, though. Next. Chart 22, here's the triple Qs with those 4 time frames we like to monitor. Again, very similar look to the S&P. Remember, a week and a half ago when we were extremely oversold, you had the support cycle, the DeMark 9, the wide ribbon, everything was set up there for a bungee rally, which we got. Now on the daily, we have a little A there showing up. That's amateur buying. What that means is it's basically traders chasing that rally. It shows up with smaller buy orders, like a couple hundred shares, stuff like that. Again, sometimes these don't work out, or sometimes they're early, but you do have this showing up. You can see the DeMark 13 on the half day. Again, so ATR is support now in all these time frames. Next, chart 23, here's IWM small caps. Again, this has been the weakest index by far this year. Clearly that head and shoulder pattern played out. We had 5 waves to the downside into late October. Nice rally, which stalled last week at the 50-day moving average. Okay, now we're pulling back. I am looking for this to form a higher low, though. This was the largest rally since that August high, so I am looking for a higher low sometime on this pullback. Next. Chart 24, here's the 2-hour chart. This is the one I've been showing. So again, so far, nice pullback. We've retraced about 38%. We filled the one open gap here. There's another one below. Whether we get to that one on this pullback or not remains to be seen. But I am monitoring this for an eventual trigger long because, again, I favor a higher low now on this pullback. That does it for the indexes, guys. Let's move on. Chart 25, here's the VIX. As you know, with the market rally last week and holding up this week, the VIX has been smashed down. One thing I mentioned to Steve last night is you could see the lower Bollinger Bands on the VIX, how they're very steep. In fact, it's almost impossible now for the VIX to tag or get below those lower Bollinger Bands. Okay, so when I see things like this, what generally happens is you'll get a bounce in the VIX, and that'll cause this lower band to flatten out. And then on your next pullback, it can more easily test it or go below it and then reverse. So that's something to be on the lookout for now. But it is looking a little oversold here. Let's take a look at a 60-minute time frame. Chart 26, here's the 60-minute time frame. Again, we showed this yesterday, but it continues to flesh out this strong MACD divergence, wedge-like pattern. Again, it hasn't reversed, but it is something I'm watching. And again, because I'm expecting an eventual bounce in the VIX to cause that lower Bollinger Bands to move up, I do think this is eventually going to bounce, and that'll be the pullback in the market we're looking for. Next. Chart 27, here's the VIX and the VVIX. That's the volatility index of the VIX. It's been leading up a little bit versus the VIX. As you can see, this has been moving up where the VIX continues to move down. Just something to be aware of. Next. Chart 28, here's the NYSI 9 EMA crossover system. Like I confirmed, this confirmed long last week, even if you use that filter trigger. The previous sell signal was a great signal, so I think this could be a decent buy signal. Chart 29, here's that weekly version, which also confirmed last week when it took out the high of that previous NYSE down bar. Next, moving to bonds, chart 30, high yield corporate. Tested its September high, pulling back a little bit, but still looks very strong. The market tends to follow high yield corporate, and that's what's helped drag the market up lately, as the market's played some catch up. Chart 31, here's a 60-minute view of the S&P versus high yield corporate. At the moment, again, this could be negated if the high yield corporate has a strong push here and makes a new high. But right now, you have a higher high on the S&P, a lower high on HYG. And unless this is negated, this is telling us to look for a pullback in the market sometime soon. You could see here at the lows, you had a higher low on the high yield corporate versus that lower low in the S&P. So that gave you an early warning prelude for that market rally. And then, of course, in mid-October, you had the opposite. You had a lower high in high yield corporate, higher high in the S&P, and that led to a sell-off. So I really like this chart for early warning signs. So right now, it's given a little warning sign unless this high yield corporate can take out that divergence. Next, chart 32, 10-year Treasury yield. Remember, last week it broke through that parabolic uptrend, stalling essentially at the 5% level, and it continues lower. It's now back below its 50-day moving average. That's obviously helped the market. Next, chart 33, TLT 20-year bonds. They move opposite of the 10-year, so it's done the opposite, broke out to the upside from its parabolic downtrend, also above its 50-day moving average. Next, chart 34, TLT 60-minute chart. On Monday's newsletter, I showed this. I said I was looking for a higher low, and we got that higher low right around the 38% fib, and then rally back to the highs. Chart 35, there's the monthly view of the 10-year. Again, this is the chart I've been showing for a couple months now. This monthly chart, TLT, you can count 5 ways down from the 2020 highs. So it has a clear 5-wave downtrend. If we've put in a 5th wave low, I'm looking for a counter trend rally to last about a year. ABC rally, form a lower high. But that could provide juice for the market, even into that election year, which next year's election is going to be something, I think. I'm not even going to get into that. Next, Jabber 36, TMF. That's the triple long ETF for the 20-year bonds. Really nice move out of this pattern. Heck of a percentage move. Next, moving on to the sectors, just doing a quick update on these. Here's XLF. Again, last week it rallied to the 61.8 fib, pulling back there, but again, it's above its got support here now at the 50-day moving average. Jabber 38, banks. They broke out of their downtrend channel last week, pulling back a little bit. So 50-day moving average here, and the downtrend channel line is now support. Jabber 39, XLK technology, again, moves very similar to the Qs. Broke out of this pattern. Next, Jabber 40, transports. Heck of a move up from that oversold condition. Jabber 41, jets, the airlines, subcomponent of transports. This has had a nice move from that trigger I gave last week, which was the trigger was buying inside the pattern there, just over that 15 area. Today it was up, but gave back some of those gains. Jabber 42, there's the 2-hour view. Again, you can see it rallied up back into that resistance gap area, filled it, and pulling back a bit. Next, Jabber 43, XLE Energy with the meltdown on commodities and crude oil. This continues to sell off, now firmly below its 200-day moving average. Next, Jabber 44, emerging markets. I showed this on the weekend. We had that bullish break in symmetry, pulling back here, but because of the symmetry break, I am looking for an eventual higher low. Current supports the 50-day moving average. Finally, Jabber 45, K-Web, that's Chinese internet, pulling back off that downtrend line here. Let's see if we can get a higher low now. Next, moving on to commodities, Jabber 46, DBC, melting down, still hanging on to its 200-day moving average for now, but kind of has a little rough head and shoulder look to it here if you look at it. Left shoulder, head, right shoulder, neckline right around the 200-day moving average. Next, Jabber 47, crude oil continues to melt down, as you can see. Over the weekend, I showed this, in the previous week, as a kind of a slanted head and shoulder pattern, and that has been playing out. It appears to be we're in some sort of wave 3 of C here at the moment. Jabber 48, copper. Again, copper found support at that big zone, 355, that it's been finding for the last year. Pulling back a little bit now. Jabber 49, Bitcoin. Again, like I said, huge ramp from that big demand zone, an area where we talked about a couple weeks ago. Still elevated here, moving average wide, but the trend is still strongly up. Next, Jabber 50, MSTR. This was the long idea I gave over a week ago. Had a tight coil on the 60-minute time frame. Trigger was around breaking that 430 area, and it's had a nice move up since. I stated today on the trading community, if you're still long, just trail your stops up to each new higher low, like I show here. So once you broke out of here, you got to set a stop here, then these next higher lows. Protect those profits, and you can stay in the trend. Next, Jabber 51, US dollar. Again, essentially flat today. Here's the overall pattern that's forming. Next, Jabber 52, gold, pulling back. Remember, I've been favoring a pullback in the metal. It's now lost the 20-day moving average. 38% fib is 1944. So areas I'm looking for it to potentially find support, maybe around this downtrend line here. You got the 50-day moving average next. Again, the big culprit, guys, the stocks are underperforming. This is measured the GDX-GLD ratio. You can see it's overall been downtrending since the May highs. And recently here, it started trending down again as well. But I'm looking for this to form a higher low sometime on this pullback. Next, Jabber 53 silver, again, essentially just in the middle of this big old pattern. Next, Jabber 54 GDX, again, just continues to melt down over 3% today. Ugly. Again, for now, I'm still favoring this as a wave A, B, and then maybe a C up. This could be a B. Remember, these wave Bs or 2s can be very deep. I would like to see it ultimately hold around this downtrend line in that 61.8 fib area, 27.35. By the way, the KISS system that I've been showing is flat. It hit its smart trailing stop a few days ago. Next, Jabber 55. Here's another view. Now, one thing that's nice now is I can at least count 3 waves down from this 3016 high. You can see one wave, wave A, wave B, wave C. So once this completes, we get a higher low. This could be a decent area to take a long. But again, this is a very tough area to trade, guys. It really, really is. Next, Jabber 56. Here's a 60-minute view. This kind of shows you that A, B, C pattern. Here's the 61 fib. There's also an open gap here, which could also be a potential magnet. It's around 27. Finally, Jabber 57. Here's the 15-minute view. So a couple days ago, on that little bounce in the morning, I said, guys, it looked like a bear flag. Wait, and that's exactly what it was. Bear flag, sell off. And then yesterday I commented that bounce looked like another bear flag, wave 4. And that's exactly what it was. We're down again. Now, potentially, we can count 5 waves to the downside now with a little bit of MACD divergence. So that's why I am now on the lookout for this, for some sort of reversal if it's going to happen. Next, Jabber 58, GDXJ, again, essentially the same pattern. All right, guys, moving on to trade ideas. So Jabber 59, Yeti, was a short idea of mine in Monday's newsletter. Heck of a move down. Congrats to those of you who caught it. I know some of you did. Beautiful bull bear flag. Jabber 60, AJG, long setup of mine from last week, simple breakout, continues to trend up. Trim and trail, nice trade. Jabber 61, IDYA, another long idea of mine from last week. It triggered over that 2770 area, rallied up, pulled back, formed a higher low, stayed above the 9 EMA. That should be your new swing stop if you still have some. Next, Jabber 62, TUP. This is a coil pattern I put out on Monday, and instead it broke to the downside. Would have been a good short. I didn't short it. I actually took a long at the lower trend line with a tight stop and stopped out. But I should have actually reversed and went short. Next, Jabber 63, DGX. Long idea from a couple weeks ago that's played out beautifully. This is probably the last time I'm going to show this, guys. I mean, it's tagged its 200-day moving average. You know, if you bought at that 125 area, most likely you're out of it by now. That's been a nice trade. Next, Jabber 64, GDHG. This is a long idea of mine from last Monday. Again, another one that played out very nicely. You know, the trigger was around $14, hit 22, hell of a percentage move. And if you didn't get out of there, you know, you're able to get out at $19 to $20 still. So, heck of a move. This is probably the last time I'll show this, but very nice swing trade. Next, Jabber 65, Airbnb. I showed this on Monday. Potential short here if it breaks this to the downside. Make sure to check on earnings. Next, Jabber 66, Tesla. This is a 2-hour chart. You have a tight coil here, so this is one to watch right away for a quick pop. Next, Jabber 67, Massimo. Nice little base. Good pickup in volume, which grabs my attention. Heck of a correction just since the April highs. It was about $200. It's now down to 83, so like almost a 60% haircut. Next, Jabber 68, TCN. Again, what stood out to me was the pickup in volume. So you got a resistance right here around the declining 50-day moving average. Jabber 69, RL, Ralph Polo, another one to watch if it can take out this resistance. Again, big pickup in volume today. Charber 70, CCO, clear channel outdoors. Nice pop, took out some resistance here, closing right at the 50-day moving average. But I'd like to pick up in volume. I think this has potential for follow through over today's highs. Maybe you get a move back up to the 200-day moving average. I had trouble finding good long setups, guys. So these were the best I could find out of my scanner. So that may be saying the market's getting a little short-term toppy as well. But again, the bulls clearly have the football. Be careful shorting a trend. It's actually best for most of you to wait for a symmetry break and then short a lower high. Anyway, guys, have a good evening and see you tomorrow. Take care.